Hi guys, today's video is about the spot stochastic theory. But before I go directly into the topic, I want to ask you something. Because most probably many of you have heard that the less lines and indicators on the chart, the better. I would like to know what is your opinion on that topic, so please write in the comment section what is your personal approach to that thesis, because today I'll be doing something completely opposite. This system was introduced in 2007 on one of the trading forums. It offers an unusual way of using the stochastic oscillator, so let's jump into the MetaTrader and see what is it about. Okay guys, so right now we are in the MetaTrader 4 platform, and as you can see this is a combination of two indicators, the cycle curve indicator and the stochastic with 8 stochastic lines, so it is not a usual stochastic indicator. And to be honest with you, I do not know if there is this kind of version on other platforms, so I just focused on MetaTrader 4 and I think it would be the best choice to do in this video. So maybe let's start from checking how we implement those indicators, and of course below the video in the description there will be the link to download all the files. So as usual, what we should do is to go to File, open Data folder. This thing will pop up. Go to MQL4, Indicators, and copy and paste all the indicators right here. So I already done that. As you can see, I have those indicators, the cycle curve, the extremum, and the stochastic 8 times. So what you should do later is to close and open again the MetaTrader 4, and they will be on the left side in the indicators list. So what you should do is to just grab this one, add to your chart, and inputs. You need to always check the mark to allow DLL imports. Inputs, just leave them as it is. The fast MA on 12, slow MA on 24, crosses on 50. Show all dots true and alerts on false. So it would not show all the alerts because we do not want all the alerts to be popping up on our platform all the time. That's not the goal. As for the colors, here is yellow. As I already noticed, it isn't visible very well on the chart. Also the lime color for the dots. So mark OK, and as you can see it's an orange line, red dots are above, and blue are below, and this is the range from the 0 to 100. On the stochastic, again, you are placing it on the chart, and what you should do is leave the values at default. Stochastic, the percentage D on 12, stochastic K on 8, and stochastic S on 5. So also all DLL imports. Colors, we could leave them as it is on red. It doesn't really matter that much. And on levels, we should add the extreme levels. So as usual, you are using most probably the 20 and 80 values. And as for this strategy, the author of the strategy recommended to tighten the boundaries for 15 and 85. You can also use the Fibonacci retracement levels, the 23 and the 78. So it depends solely on you. Just make it a little bit thicker. Okay, and as you can see, already is prepared to spot some trades. So this strategy goes as follows. The stochastic indicator needs to create kind of a rope. All the stochastic lines needs to be very tight in the extremes regions, as you can see. So the conditions, for example, for a short trade are as follows. The cycle curve needs to be close to the 100 value, and we need to have this red dot appeared. The stochastic oscillator needs to perform kind of a rope. The distance between all of the lines needs to be very, very tight, and of course it needs to occur in the extreme zone 85. And the entry level is when at least there are 8 of them, and at least half of them, which means 4, are crossing the extreme line. So for example, in this situation, 1, 2, 3, 4 would be this moment, and it is this candle. Because, as I mentioned, we saw the extreme was over, the cycle curve was at almost at 100 level. There was performed a rope thing on the stochastic oscillator, and we were moving from the extremes. So we were entering on this candle, and as for the stop loss, the author recommends 30 pips. So I think it is a reasonable move. So it is somewhere over here. Let's mark it. Let's check it again. Enter on this candle. 30 pips. Yeah, we could move it a bit higher even. Come on. Okay, so that would be our stop loss. Our entry level would be here. Let's insert shape, rectangle. That would be our entry level. Okay, so as for the signal to exit the trade, to set a take profit, for example, I think there are 2 ways. The author doesn't give us the clear explanation how to do it, but what I am doing most of the times is either I am looking for a signal for the opposite trade, for the trade in the opposite direction, which is, for example, like this situation right here. Or we can just use the risk-reward ratio 3:1. So for example, when we have a 30 pips stop loss, so we are looking for the 90 pips take profit level. So for example, yeah, it would be somewhere over here if we use the 3:1 risk-reward ratio. If we would use the opposite direction signal, we have the dot here because the cycle curve is near the 0 line. The stochastic lines are very, very close to each other. So I would recommend that as a early signal for the entering the trade. And yeah, we could either wait for the 4th line to break the extreme zone line, which would be somewhere over here on this candle. Okay guys, so I think we have a good example for a buy trade. So we have the first signal, which is the stochastic lines are very, very in a tight distance between each other, and the cycle curve we have the near 0 line, 0 level, and we have this blue dot appeared. So of course we are entering on the 4th line when it is crossing the extreme line. Okay, so this is this candle. So let's mark it with the shape. One second, which candle was that? Okay, this candle. Okay, so we have the entry level. And now, as we were talking previously, the take profit based on risk-reward ratio or the opposite direction signal. So let's check the risk-reward ratio. We have the 30 pips stop loss, so we need to check for 90 pips. And I do not think, no, we could not reach the 90 pips take profit based on risk-reward ratio, but we also have here the opposite direction signal. So we have the cycle craft near the 100 line, and yeah, a couple dots are visible right here, and we have the stochastic lines which are very close to each other. So I think that would be our stop loss, maybe somewhere over here. Stop loss, take profit, maybe somewhere over here. We will be able to spot the signal and to exit the trade, and we could take 60 pips, so 2-to-1 risk reward ratio on this trade. So now you know how this strategy works. We discussed all the major things that you need to know in order to trade with this system, the examples in both directions, and also at the end I need to mention that it works best on M30 and higher time frames, which is 1 hour, 4 hour, daily, etc. As for the currency pairs, it works best on major and major crosses. You shouldn't use it on the exotics. I need to confess to you that I didn't make the backtest yet for this strategy, so I do not know what is the win rate of this strategy, but the risk-reward ratio, which is 2-to-1, 3-to-1, looks very promising, and yeah, we like that stuff. So I will update you on other social medias, which is the Instagram and TikTok. So be sure, of course, to subscribe to this channel on YouTube, and to check for the account, for the Light Finance account on the Instagram and TikTok. I'm also posting there. So thank you for watching, guys, and yeah, hope to meet you in the comment section, and yeah, till next time, take care, bye.